Today, I'm going to cover 6 things you do not want to do from the time you get pre-qualified to the time you actually close on your loan. Number one, do not buy a car. That is probably the most common thing I've seen create a problem right before closing, where you go from qualified, about to close, excited, to you're not qualified anymore because you bought this car and added a debt right before closing, and it screws up your debt to income ratios. Don't buy a car before closing. Number two, don't open any new credit cards. I've seen that as well. That's one of the more common ones as well. That can cause all sorts of problems as well, mainly with debt to income, but it can also just lower your credit score, and that drop in your credit score from that credit card company pulling your credit to see if they can issue you a credit card can sometimes change the rate you're able to get, change whatever, or completely disqualify you as well. Number three, don't change jobs. Don't change careers. Sometimes you can't help but having to change jobs, and it might be okay, but if you can help it, do not change jobs until after you've closed on the home that you're buying. Don't co-sign for anybody. You might think I need to help out my kid or my friend or my sibling or whatever, but you need to wait until after closing. If you co-sign for somebody, that debt that they're going to pay is going to show up on your credit report now, and that can obviously cause problems as well. Five, don't significantly increase your credit card balances. Sometimes people get excited, they're getting close to buying a home or closing on the home, and they go to Home Depot and Lowe's and they buy all sorts of things they're going to need in this house, and they go to furniture stores and they open credit there and they run up balances for new furniture for the new house or whatever. If you significantly increase your credit card balances, that can cause you to no longer qualify for the home. That can also decrease your credit score right before closing, and that obviously can cause problems as well. And then last, it's a little different. It may sound a little weird, but you don't want to have any large deposits from the time you get pre-qualified to the time of your closing onto your bank accounts. Large deposits are just typically red flags for underwriters. They have to source it. They got to know where it came from, and depending on where it came from and your ability to source it, it can cause problems as well. So one of the biggest things to remember here is that lenders and banks, they will look at your credit one last time right before you're closing, and if there's significant change, they also do a job check right before closing. If there's significant change in general with your overall portfolio, it can cause a problem. Once you get pre-qualified, try to not change anything until after you have closed. Hope this helps.